Pantheon AI presents Pantheon AI Podcast, April 30th. Welcome, everyone, to the PAI Morning Briefing. I'm host A from Pantheon AI.
And I'm host B. Good morning, April 30th, 2025. Thanks for joining us as we dive into today's market moves, trends, and all the news shaping the financial world.
Absolutely. Let's jump right into a quick market snapshot, shall we?
Please do.
Okay, so the S&P 500 is trading right now around 5,508.5.
Okay.
That's a small gain, about 0.164%. Not a massive jump, but it shows the market's kind of holding its ground.
Right, like it's trying to balance.
Exactly. Over at the Dow Jones, we're seeing 40,260.85, with just a tiny dip, negative 0.073%.
Okay, so slightly down there.
Yeah, but the Nasdaq, it's climbing, up to 17,224.54, an increase of nearly 0.728%.
Oh, good for the Nasdaq then. Tech seems to be doing all right.
It is. Now, switching gears to crypto for a sec. Bitcoin is sitting around 93,727.82, down about 0.58%.
Okay, so a little pullback.
Yeah, and Ethereum isn't far behind, trading at 1,759.145, which is a decline of close to negative 2.20%.
Wow, that's a bigger dip there. So traditional markets are kind of stable, but crypto's seeing some headwinds?
Exactly. These numbers, just snapshots really, just remind us how crucial it is to keep an eye on diversified assets right now.
Definitely. So, moving beyond the quick numbers, what are some of the bigger trends you're seeing today?
Well, a really significant story getting a lot of attention is Apple and their earnings report.
Ah, Apple. Always a big one.
Right? And there's been so much chatter about its stock price hovering around this critical $200 mark.
Okay, $200. Why is that number so important?
It's not just random. It represents a support level. Historically, hitting this level has sparked investor interest.
Gotcha. Like a floor?
Precisely. The market seems to think that once Apple consistently stays above this threshold, it could be set for new highs, potentially driven by expansions in their manufacturing and supply chain strategies.
That makes sense. When a giant like Apple is at such a pivotal point, it definitely sends ripples, not just through tech funds, but the whole market, right?
Totally. And hand in hand with this Apple story, there's an underlying narrative about changing investor sentiment.
Oh?
Yeah, this quiet, almost determined move that seems to underscore investor caution in these uncertain times.
So even with potential good news like Apple's manufacturing plans, there's still a cautious feeling?
Exactly. It's like the market's taking a deep breath, realizing that while the fundamentals might be okay, external pressures like global supply chain disruptions and rising costs are still big concerns.
Yeah, those haven't just disappeared, and the market reaction to Apple's report today could really set off a chain reaction, couldn't it?
It could. Traders will be sifting through all the signals like a chef tasting broth to get the seasoning just right.
That's a good analogy. So let's shift to our news roundup. What are the other big stories?
All right, we've got about a dozen compelling stories, but let's start back in tech because that Apple headline is just everywhere.
Right, the $200 mark.
Yeah, investors aren't just focused on the profit figures, but intensely watching that price point. It's become a symbol of stability and potential growth.
It's been circulating constantly.
It has, and for good reason. The talk of new manufacturing plans and hints at product diversification have investors wondering if this is the calm before a technological storm. Could Apple be gearing up for a major product update or a strategic shift?
That's interesting to think about. Only time will really tell. But the anticipation is definitely there.
Totally. And related to that, we're seeing a lot of editorial coverage echoing this Apple earnings narrative. It keeps reinforcing the idea that support levels, like that $200 mark, are key for momentum.
It's almost like a market ritual, isn't it? Investors really paying attention to these technical levels that have been turning points before.
It really is. You could even say these support levels offer a sort of financial comfort blanket during uncertain times.
That's a great way to put it. Okay, moving beyond tech, what else is making waves?
Let's go to leisure and travel. Norwegian Cruise Line has been under the microscope.
Oh, what's happening there?
They warned of missing profit estimates because of macroeconomic volatility. In pre-market trading, their stock fell by over 8%.
Wow, 8% is significant. So even with the idea of cruises and vacations, they're really facing external pressures?
They are. It's not just about the ships. They're grappling with shifting fuel prices, labor shortages, and fluctuating consumer demand. It's sending mixed signals about their future profitability.
That makes sense. And it's not just the consumer side facing headwinds, right? What about the labor market?
Good point. U.S. businesses are showing signs of caution. The latest ADP National Employment Report showed companies added only 62,000 jobs in April. That's way short of the forecasted 120,000.
Oh, that's a big miss. So firms are really tightening their belts?
It appears so, amid concerns over an uncertain economic horizon. This pullback in hiring echoes that broader sentiment of caution we're seeing across multiple sectors.
It raises a good question, though, doesn't it? When consumer confidence is shaky, should firms be hiring aggressively for potential growth? Or is playing it safe the better move?
Yeah, the data suggests that for now, the preference is leaning towards managing risk rather than aggressive expansion.
Okay, and switching gears globally, I heard something interesting about Mark Mobius and emerging markets?
Ah, yes, the father of emerging markets. There's a narrative circulating that Mobius is holding a staggering 95% of his portfolio in cash.
95% cash? In emerging markets, known for volatility? That's bold.
It is. It's triggered a lot of discussion. Is it a signal of an impending storm in those markets? Or is it a tactical move to be ready to jump on opportunities when they appear?
It really challenges the conventional wisdom of long-term equity exposure, doesn't it?
It does. It stands out as both a hedge against uncertainty and a challenge to that norm.
And this emphasis on caution isn't just isolated to Mobius, right? Some investors are asking if this pullback in hiring and conservative emerging market stance is part of a bigger shift.
Exactly. Are we at the crossroads of a prolonged period of tight liquidity and subdued risk appetite? These are pressing questions for investors, both big and small, trying to figure out portfolio allocations.
Definitely. So let's try to weave these strands together a bit. We've got Apple's $200 mark, the struggles in travel like Norwegian Cruise Line, the cautious hiring shown by the ADP report, and Mobius's cash position.
Right. The Apple story isn't just about earnings. It's market psychology meeting technical analysis. Travel and leisure are getting a reality check on macroeconomic uncertainty. And the ADP report clearly shows businesses are recalibrating expectations due to tighter margins and a less robust global economy.
And the cash liquidity in emerging markets, like Mobius's move, it highlights that caution can be wise even if it seems overly conservative to some.
It does. It contrasts sharply with the bullishness we see in tech sometimes. It's a good reminder that markets aren't one big thing. They're a tapestry of different narratives and risk appetites across sectors and geographies.
That's so true. And analyzing investor sentiment, it seems like we're oscillating between cautious optimism and genuine concern.
Totally. Nasdaq's gains show some optimism in tech, but the Dow's dip and crypto's downturn point to underlying vulnerabilities. Are we seeing the early stages of a market rebalancing act?
Could be. For investors, these nuances are definitely a signal to review asset allocations and maybe rethink risk mitigation strategies.
Let's dig a little deeper into sector analysis then. Back to tech. Apple's still the main event.
The $200 level again.
Yes. The focus on that support level has people speculating about broader implications for tech stocks. Apple's strategic shifts, whether in manufacturing or supply chain, could ripple through chip makers, software providers, everyone.
It's a confidence marker, not just a number.
Exactly, a psychological anchor for traders. And the Nasdaq's overall performance. That upward movement reflects underlying optimism, even as traditional sectors face rising costs and cautious spending.
So if Apple breaks through that ceiling with good earnings, it could really boost the whole tech sector?
It could pave the way for a broader rally. Investors will be watching earnings reports across tech, from cloud services to semiconductors. It's a sector with huge potential, but still sensitive to those global supply chain issues we talked about.
Right. Even the tech giants aren't immune to real-world challenges. What about the energy sector?
Global oil prices and renewable energy trends are always influencing sentiment. We didn't have a screaming headline about energy today, but it's woven into the background of our stories. Fuel prices, for example, are a pivotal concern for companies like Norwegian Cruise Line.
Ah, true. Higher operating costs there. So energy performance subtly affects other sectors, like consumer discretionary?
Absolutely. The nuances of one sector often propel the fortunes or misfortunes of another.
And in the financial sector, what are you seeing?
Financial institutions are walking a fine line. There's growth optimism in some areas, but caution in others. With interest rates still a big topic, and global headwinds affecting hiring and credit, they face complex challenges.
So are banks bracing for tighter margins?
That discussion is definitely happening after some mixed earnings reports. You know, sometimes it feels like banks have more drama than a daytime soap opera.
Ha! That's a fair comparison. But it really reflects the times, doesn't it? A blend of cautious recovery and measured risk-taking.
It does. And globally, these domestic trends have huge implications. Emerging markets are a compelling study in contrasts.
How so?
On one hand, you have countries rapidly modernizing, boosted by young populations and tech access. But on the other, there's the stark reality of political and economic instability.
Something legends like Mark Mobius have warned about.
Exactly. His 95% cash position isn't just a personal choice. It's emblematic of a broader caution many investors should consider. It raises a fundamental question. Can challenges in emerging markets spill over and affect developed economies?
That's a big question. The answer isn't clear yet, but savvy investors are definitely pondering it.
Absolutely. Bringing it back home for a moment, expert insights suggest we're in a phase of stable turbulence.
Stable turbulence? That sounds like a contradiction.
It does, doesn't it? But it means gradual gains in some areas are offset by significant headwinds elsewhere. Apple's earnings could bring volatility to tech, setting the tone. Expect earnings revisions and cautious optimism.
And sporadic swings in financials as traders adjust positions based on mixed signals?
Precisely. As one of our colleagues at PantheonAI humorously put it, if the market were a roller coaster, we'd be riding the teeter-totter between cautious optimism and deep skepticism.
Ha! That perfectly captures the current feeling.
It really does. It defines the present narrative. With tech showing potential alongside economic risks, maybe the winners won't be those with the boldest projections, but the ones with the most resilient fundamentals.
That's a good takeaway. So let's summarize the key points from today's deep dive.
First, the market is delicately balanced. Minor fluctuations in the indexes show investor caution, even as some segments push forward.
Second, that repeated attention on Apple's $200 support level highlights how important technical markers are in trading psychology.
Third, the challenges facing leisure and travel, like Norwegian Cruise Line, remind us that even industries that seem set for growth aren't immune to broader economic forces.
And fourth, the ADP report showing subdued hiring means businesses are taking a wait-and-see approach, tempering that optimism we saw maybe a year ago with a desire to manage risk.
Exactly. Looking ahead, there are some thought-provoking questions for everyone listening.
Like, how will Apple's earnings affect not just its stock, but the whole tech sector?
Yes, and will sectors like leisure and energy adapt if hiring stays cautious amid uncertainty?
And what can we learn from that conservative stance in emerging markets, like Mobius's cash position, in this era of rapid change?
Those are questions that really merit reflection, whether you're sipping coffee or on your commute.
Definitely. Let's quickly revisit the sector analysis for tech, energy, and finance.
In tech, besides Apple, the Nasdaq's gains show underlying innovation and resilience. It's not just about the giants. There are emerging stories among mid-cap tech companies too.
They might be more agile in navigating supply chain issues and competition.
Could be. Energy. Even without headlines, that interplay of rising costs and fluctuating dynamics is key. Renewables and traditional energy are in a delicate dance that affects recovery across industries.
And in finance, banks and investment firms are dealing with cautious recovery and unpredictability. The need for balance is clear.
Totally. With interest rates and inflation concerns, they need to double down on risk management. It might not bring huge short-term gains, but it prepares them for future storms. Seasoned investors know that's a timeless strategy.
That's a good point. On a personal note, I always enjoy throwing in a little humor in finance. Sometimes I think the market is like my elderly uncle during holiday dinners.
Oh.
Yeah, unpredictable, full of surprises, and occasionally prone to dropping off at the most inconvenient moments.
Haha, that's perfect. But like that uncle, it keeps us on our toes, makes us plan and prepare, and yeah, sometimes laugh at the absurdity.
Exactly, and globally, we can't ignore how interconnected everything is. Turbulence in emerging markets isn't isolated. It affects commodity prices, sentiment, even policy decisions elsewhere.
In this complex web, diversification really is your best ally. Keep an eye on asset allocations. Stay informed. Never underestimate a well-timed strategic shift.
It's like a long game of chess. Every move counts, and every piece, from big indexes to smaller emerging stocks, has its role.
Expert insights suggest a mixed outlook nearby. Strong tech earnings hint at resilience, but cautious sentiment and uneven job figures say we're not in fully sunny weather yet.
So how do investors reconcile that? A balanced approach?
That's one strategy. Opportunistic investments in growth areas combined with a conservative stance where there are headwinds.
It all comes down to being prepared and informed.
Which is where PantheonAI comes in. Your information copilot, guiding you through these times with insights, connecting the dots.
Right, so let's do one final quick recap of the key takeaways.
Okay, indexes show modest movements, reflecting vigilance and cautious optimism. Crypto is down slightly, showing its volatility.
Apple's $200 support level is a focal point, setting the stage for earnings season.
Norwegian Cruise Line's challenges remind us even leisure brands face macroeconomic pressures.
The ADP report signals cautious hiring by U.S. firms.
And emerging markets, like Mobius's cash position, make us ponder the future trajectory of global investments.
So every move in the market tells a story. Stay curious, diligent, and maybe a bit playful in your approach to finance.
Absolutely. Before we sign off, just a few final questions to leave you with.
What if Apple exceeds expectations at that $200 mark?
How will sectors like leisure and energy adapt if hiring remains cautious?
And what lessons can we draw from the conservative stance in emerging markets in this fast-changing era?
Great questions to mull over. Thank you for joining us on this deep dive today.
Remember, as you plan your next moves, Pantheon AI is here as your information co-pilot.
Tomorrow's episode will have even more insights and predictions. Don't hesitate to reach out with questions. Learning shouldn't feel like a full-time job.
Definitely not. Until next time, stay informed, stay curious.
And we look forward to our next conversation.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.